Morning everybody, it's Chris here from Serene Education with the 4 majors and latest update for the 13th of April 2012. I'm just going to be going with 4 majors this morning, starting with the euro against US dollar. Let's have a look and see what's been happening. Yesterday, a nice bullish engulfing, taking us through this consolidation pattern here, breaking higher. As I mentioned yesterday, we did need to see price closing above 13.15 to give us an indication of potential highs or potential upside movement to at least the 13.25, which would be the next target, and 13.30. And then back up to 13.45 and 13.50. So as it stands at the moment now, you can see price is broken higher, however not closed above the 20 period moving average, and on the Asian session trading still in a consolidative range, but this time on the upper end of this resistance level. So we can find support over here, then we could see the euro moving higher against the US dollar towards the 13.25.50 and the 13.300 overall. So CTC, however, is still negative. Okay, we're still swinging lower. If you zoom out, you can see quite clearly where prices come from. There you go. You can see swing lows, swing lows. So price is still moving to the downside. All the moving averages above price, which is a negative signal. Yes, we have found support here at 1300 or 1305. Okay, however, we're still on a negative downtrend, and this CTC strategy on the daily won't show you a positiveness until we actually broken this trend line and ideally trading above the institution moving average. So let's have a look and see what's happening on the 4 hour. You can quite clearly see 1305, a lot of support here, and then momentum buying into it and breaking and trading higher than that area that I mentioned. Price has got to now, during the Asian session, price has actually pulled back last 4 hours, but we've got to see price actually staying above this 1600 mark over here and trying to get above the institution in order for us to get a definite signal for further upside towards the 13.25.50 and the 13.300 as I mentioned earlier. So those areas over here, 13.300, there we go, 25.50, there we go. So those will be our next targets if and when price actually finds support above here. Ideally you want to get above this institution. As long as price remains below the institution, then and you can see the relative strength over here, for example, pulled back towards the 50 line, however still trading below it. Yes, it's all blue across the board, however I'd like to see price above the institution and a definite signal above the RSI 50. At the moment now it's trading below it. It's not a clear signal, and you can see that signal is below because of this bearish engulfing on a 4 hour time frame, so a lot of negativity as we've gone into this area here. That should reflect on an hourly chart. There we go, we've had the pullback. However, on this chart you can see that the 50 is now being breached. Now price has got to find support above this. Okay, as long as it remains above 50, which means that it'll have to trade it sideways, as long as it remains above the institution moving average on this time frame. Got to stay above this area here. This price resistance, now it's going to be a new support. Then we could see price pulling back and then bouncing higher. Okay, you can see higher swings over here. Swing high, swing high, swing high. Could see some indication of further movement to the upside and in and around this area. Nice bullish engulfing. Would see 13.25 and then the 13.300 as our next potential targets for this pair. So they're not too far off. As long as price remains above this 1600 mark, above the institution moving average on an hourly, then we should still be looking for favorable upside movement for this pair. On to sterling, let's have a look at the daily. You can quite clearly see yesterday also moving higher after the support chart. A lot of consolidation above the institution moving average, above this prior fib retracement area at 1585, and sure enough we've seen price moving higher. Nice bullish engulfing of this candle here. A lot more happening at the upper end in and around this area. Nice wick to the downside, confirming there should be more buying sentiment creeping in, but we need a confirmation. Sure enough, we got one on Wednesday, bullish engulfing, and upside we went. CTC remained blue across the board. Yes, we had a red candle, however we still maintained above the institution moving average, which is important for consolidation, upside favoritism. And we mentioned as long as we stayed above this area, above the institution, then we should see another kick to the upside. And sure enough, we've made our way up towards it. And we've seen a slight hesitation as we've headed into the 1600 yesterday. On the Asian session this morning, we've seen a slight pullback, slight consolidation. That's going to be the normal as we head into this very strong support and resistance level. You can see quite clearly a number of support and resistance lines coming together here at this level. So if you look at our 4 hour chart, there we go, 1600 above us, RSI is above, all the moving average below price, and you can see nice hammers here on those moving averages and price really moving higher, which is a great sign that we should see further extensions to the upside. Slight pullback, not a worry, as long as it maintains above these areas around here. If you want to look at that pullback, you can take the lows over here to the start, to the high of this candle here, the 4-hour candle, the shooting star exhaustion candle here before we saw this bearish engulfing. Notice the 23.6 is in play right now. If price can stay above the 23.6, then we could see a reattempt of 1600 quite soon. However, we could see if it goes back towards the 38.2, which would be price support and resistance at this level, then great here at 50.93, not a problem. It's got to maintain these levels here above the 20 and the 38.2 before we see further extension. Break below that, then we should see further consolidation with the institution moving average as our next target on our 4-hour. Bearish engulfing here could be a sign that we could see slowing down in the market. As we head into the 1600, very strong psychological resistance area here, so very, very important that we see this 1600 being breached quite soon. If we don't, then you're going to see a lot of hesitation going into this area. Hourly chart, you can quite clearly see that institution moving average is below price, the line is above the 50% RSI line, and CTC is well extended, so everything's in our favor. We have had a red candle, however, on the pullback. That's noticeable. You can see that's happening now as we're heading towards a strong psychological area here at 1600. I'll just make it nice and big so you can see it. There we go. So what we want to see now, prior resistance. Quite clearly see a prior resistance. That's going to be the new support. So if I take the low here to the high that we saw yesterday, notice the 23.6 is that area just before the support area here. Okay, so as long as it maintains above the 50.93, then great. We should see further consolidation with potential for upside strength, and that should coincide with the 23.6. If it breaks lower, bearish engulfing breaks lower than 50.93, then we could see further consolidation towards these areas here at 15.90 in particular, with the institution moving averages. Break below that, then we're going to see an ultimate failure, and we should be looking back down towards 15.81. But as long as the relative strength stays above the 50, and we're trading above 50.93, then we should see further indication of further upside movement. So look for an entry, nice bullish engulfing here at this level here this morning should give us an indication we should be heading back up towards 1600 quite soon. US dollar Swiss franc yesterday, bearish engulfing at this support, at this resistance, apologies. Clearly mentioned yesterday on the video that we need to see a break higher than this 90.20 yesterday in order to confirm this was non-avoidant and this was a genuine upside movement. However, this bearish engulfing yesterday has clearly indicated that we could see further consolidations to the downside, a major resistance. We've had 1, 2, 3, 4, 5, 6 days now of consolidation at this area here at 920 in particular, so definitely confirming this is very negative. Price moved right down to 910, which was a prior support and resistance level and a fib retracement area, and now on the Asian session we've seen a slight consolidation. So for this to maintain its bearishness, we want to see 910 being breached, and then we could look at 900 being our next target. CTC still remains blue across the board because we're trading above the institution moving average, and up until that point we're still moving. We were trading above all the moving averages in particular. However, bearish engulfing does confirm that we should see further downside movement. So if we move to our smaller time frames, our 4 hour in particular, you can see that the institution moving average is in play as we speak. A lot of resistance here at 920. Okay, a lot of indecision here, making this top, which is swinging lower than the previous one. So if you look at the highs here, you can see genuinely the price is moving lower. From that high down to here, you can see quite clearly resistance, 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 resistance. And sure enough, yesterday we saw price reverting to the downside quite steadily. However, at 910, 909, we've seen price bounce, and it's testing the institution moving average. CTC is red. Okay, we would like to see 9010 being breached, and then to give us a genuine selling indication. So break below this 909 here and closing low on a bearish engulfing would definitely give us confirmation that we should be looking at 9,000 overall as our next target. Let's have a look at the hourly just to confirm that. Yeah, trading below the institution moving average for the first time in almost 2 weeks. Relative strength is below the 50, which is a negative signal, so it's telling us the trend is definitely negative. You can see that price, even though it was trading sideways, those highs were getting lower and lower and lower, and sure enough towards this latter part over here you can see price generally fell away. Swing low, swing low, swing low. So if we see a price building up to the underside here, then we could see price releasing and then further momentum to the downside. So we had a breakout. This could be the pullback, and then we can see the continuation back down towards 909, and a break and close lower than 909 will definitely confirm that we should be looking at 9,000 overall as our next target as we move away, and all the moving averages will be above price. Our CTC strategy will be in play, and the CTC above the board will be confirming that we are looking for negative sentiment for the foreseeable future. Last pair of the day is US dollar Japanese yen. Let's have a look and see. Yeah, daily wanted to see price maintaining at level below the 38.2. Sure enough, yesterday's candle very indecisive, spinning on the spinning top, almost a graveyard doji type star here, and still on the underside. So the longer it finds resistance under this 38.2 after this breakout, then we could see a consolidation with further outlook of downside movement to continue for the foreseeable future. So in this price, we want to see lower swings, swing low, swing low, swing low. So it could continue to the downside as long as we find a nice bearish engulfing here. Get a nice bearish engulfing or shooting star resistance here would definitely signal that 80 at the 50% line here would definitely be on as our next target. There has been talk that the Japanese government might intervene. So if they intervene, the longer the US dollar falls against the Japanese yen, there's going to be intervention. Yes, they love the start of this, but they wanted the price to continue higher. Now it's falling over for the first time as we had some really bad news coming out of the States. Things are taking a little longer. There's a little bit more contraction, expansion, in jobs, etc. And productivity is really slowed down. So it doesn't bode well. And the Japanese government won't allow it to continue for that much longer because it wants a nice strong US dollar against the yen in order to do further import and export. You know, just overall, US market is a very, very big importer or exporter of its goods, and it needs to see a nice strong US dollar or one on parity so they can actually trade with each other. Otherwise the US market will just go somewhere else to find its goods. Can't have that happening. So if we see resistance here, a nice bearish engulfing at this 38.2 at the underside, then it's going to clearly confirm that prior support is a new resistance, and we should see price heading towards the 80 line. CTC still remains blue across the board because we're still trading quite a fair way above the institution moving average. So a lot of positiveness. Yes, we got until the 61.8 to see a pullback. If it gets below than that, then it's well going to see start price moving into the red across the board on the CTC. So all we want from the US dollar Japanese yen is to bearish engulfing here today, closing lower and extending its. So a nice bearish candle would definitely confirm that 80 is back on. Otherwise, what we could see here is price breaking higher. At the moment, it breaks above 38.2, then we could see potential for price change. We could see a blue arrow coming in. What we would want to see then is the blue arrow, blue candle, and then the CTC on our side is still blue, so that would confirm that ideally, long term, we should be looking back up towards the 23.6 and ultimately back up to 84. But until such time as 38.2 here as a resistance level and trading under the 50, then we should still looking for shorting opportunities to arise. That's it, guys. Hope you had a fantastic week's worth of trading. All of you that made profits, fantastic. All of you that are making slight mistakes, make a note of those mistakes you're making, and just make a note of it, and make sure that you don't make those mistakes again in the forthcoming trades. Other than that, have a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.